Anthony Ferrer of the Timepiece Gentleman, the disgraced gray market luxury watch dealer. As you may know, he was arrested by the FBI for wire fraud for stealing at least $3 million in luxury watches. I'm going to break down what I think happened and how Anthony Ferrer found himself running a consignment watch Ponzi scheme. More specifically, an accidental Ponzi scheme, meaning I don't think he set out to run a Ponzi scheme. What often happens is desperate business owners do whatever it takes to keep their business afloat, especially when they run into cash flow problems. Hi, I'm Noel Lorenzana. I'm a CPA. I've seen my share of business failures and desperate business owners scrambling for cash and doing whatever they can to keep their business from closing. The question I want to answer today is, and I want you to help me, but did Anthony Ferrer set out to rip people off by stealing their watches via a Ponzi scheme? My short answer is no, and allow me to explain. From the beginnings of their days in Dallas at the Crescent with Marco Nicolini, these were their humble beginnings. At the time, they had it all. They had business success, sales were good, the reputation was stellar, and their YouTube channel was on fire. The partnership with Anthony and Marco was a perfect synergy of salesmanship and expertise. I generally don't like partners in business because it often ends messy, but with the right people, the business can go much farther than with just one person. At the time, they didn't have a lot of experience running a business like the one they had at the Crescent. So naturally, they hired an operations manager by the name of Mike Rudin. He was a great addition to the team, and looking back, after he left, that's when things really started to fall apart for the Timepiece Gentleman. By hiring and having Mike Rudin, Anthony and Marco were able to fill their knowledge gaps, perhaps in QuickBooks bookkeeping, financial management, and most importantly, setting up and maintaining their infamous spreadsheet. Let me know what you guys think. Did things start to fall apart after Mike Rudin left? So why did Mike Rudin actually leave the Timepiece Gentleman? My guess is that he realized that he couldn't save the business from the owners, Anthony and Marco, meaning that the business was probably so mismanaged at the time, it didn't matter what he did. He probably realized that the business was doomed to fail and he wanted to get as far away from it as he could. He probably pointed out all the business deficiencies like the lack of internal controls, they were sending duplicate wire transfers, poor inventory management, watches went missing, lack of security. You all know they got robbed multiple times. Maybe neglecting IRS reporting of cash transactions over $10,000. Maybe they were neglecting money laundering compliance requirements. And most likely, lack of proper sales tax reporting. I'm sure Mike Rudin made many of these recommendations to Marco and Anthony, but they most likely fell on deaf ears. I mean, when a business is doing well, who's got time for all that administrative stuff? Let me tell you, all that is super important, and if you ignore them, it'll eventually bite you in the ass. Now, I understand that business owners focus on sales or top line growth. That's where the money's at. All that other stuff, let's call it accounting and administrative, well, that's kind of boring, right? But it's super important. Okay, so Mike Rudin leaves, and I don't think they found anyone to actually replace him. One of the key problems for the Timepiece Gentleman is that they had a big-moneyed secret investor. This investor probably invested $1 million or more in the original business. So the challenge with this is that outside investor money can often cover up any fundamental financial problems a business may have. Meaning, my guess is that if you took away the investor money, they probably would not have had a wildly successful operation like the one they appear to have at the Crescent. So circling back, when do I think the accidental Ponzi scheme started? I vividly recall from a now deleted video that after Anthony and Marco visited with Roman Scharf over at the Luxury Bazaar in Philly, it was, I believe, their first or second time out there, Anthony came back with an epiphany that he shared at the end of one of his videos. His big takeaway was that they needed to focus more on consignments versus actually purchasing a watch outright. It's kind of obvious, but if you consign a watch versus buying it outright, You instantly improve your finances or cash flows since you don't have to commit your capital towards buying the watch. You essentially shift the risk on the consignor who trusts you with their luxury watch. Unscrupulous business owners might even think of consignments as an interest-free loan. Think about it. So, focusing on the consignment model started way back at the Crescent. And if you recall, after Jimmy left Anthony's LA Timepiece Gentleman operation, he made a video for Grand Caliber addressing the buyout.
And the original agreement was there was an amount due on June 4th, but the agreement was made back in March. A lot happened in those 3 months. Grand Caliber discovered that there was a lot more sales tax that was unpaid and overdue that the company had to address. There was outstanding attorney fees that were overdue and needed to be addressed. There was outstanding consignment fees owed to consignees that the company had to address.
That's pretty interesting. As you can clearly hear, there were unpaid consignments and sales tax issues way back when at the Crescent. Fast forward, Anthony's now in LA. He tried and failed at running his business at a $95,000 penthouse in downtown LA. Okay, that's really no surprise to anyone. So we know that Anthony had a $2 million investment in his LA business vision. He wanted to change the way the West Coast shops for luxury watches. He even trademarked this. Naturally, when a business struggles, they stop paying their bills. Even though he had a $2 million investment from a private investor who obviously lost his entire investment. In my experience, when you don't actually earn the money, you're a lot looser with it. Meaning, when you run a lean business, you know how difficult it can be to earn a profit. After all, their margins were only 5 to 10%, and with their lavish spending, numerous employees, and fixed costs, there was no way they were profitable. Anthony Fair was just pretending to run a successful business in Los Angeles. It was just a matter of time until he ran out of money. It didn't take a rocket scientist to know that he would eventually fail, especially with the decline in the luxury watch market. When business is good, problems can be hard to spot, but when the market slows down, these previously hidden issues all of a sudden become more obvious. So now Anthony Fair and the Timepiece Gentleman is running out of money. What does he do? He seems to double down and lease a red Ferrari with his new business right-hand man, Z. Why did he do this? I think it was to fake it or pretend that business was going great when in actuality it was failing and he was desperate. What else does he do? Oh, he slashes his consignment rates to 5% for most watches. He needs money desperately, so he tries to get people to consign more watches with him by lowering the consignment fees and also creating, in all likelihood, illegal watch giveaways for anyone who consigned a watch with him.
Anyone that sends us a consignment piece, you're going to be entered into the drawing. Now this one's going to be a new drawing. Anybody that has anything on consignment currently with us, I'm gonna start your names right now. Anyone that sends us a consignment piece in the month of July, you're gonna be entered in another competition to win a Date Just 41. So guys, if you've got consignments, pay attention to my Instagram. My personal cell phone number is 46990.
I mean, in hindsight, it's quite obvious. He was desperate for money and he got creative with getting people to consign their watches with him. All along, faking it to the public that business was doing great. He admitted on a phone call with Bob on TikTok that he was $5 million in debt and he was out of money. He was robbing Peter to pay Paul, his own words. At this point, we know the Ponzi scheme was in full swing and the rest is history. In my opinion, do not consign your expensive luxury watches with a gray market luxury watch dealer. If you must do business with them, sell it outright and don't release the watch until the wire transfer hits your account. Also, if you consign a watch, how do you actually know the amount that you're getting is actually the amount they sold it for, less commission? Agree, disagree? Let me know your thoughts in the comment section. We're entering some very tough economic times and businesses are getting nervous. You have Roman over at Luxury Bazaar laying off people left and right. In times like this, business owners will often do desperate things to keep their business afloat. You've got CRM jewelers who are a seemingly fine operation. Now, all of a sudden, they're running luxury watch raffles. I don't know if these are legal or not. Any lawyers out there, feel free to let us know. These watch raffles may even be subject to gambling laws, which can classify them as a form of lottery. Businesses generally face strict regulations. Additionally, raffles must comply with advertising and disclosure standards, transparency about the odds, prizes, and terms. Winners can also face tax implications, and organizers must consider the tax obligations. Given all these intricacies, it's essential for anyone considering hosting a watch raffle to seek proper advice to ensure legal compliance. I'm not a lawyer and this isn't legal advice, but you know what I'm saying. Here's what the IRS says regarding taxes and raffles. An organization that pays raffle prizes must withhold 25% from the winnings and report this amount to the IRS on Form W-2G. This regular gambling withholding applies to winnings of more than $5,000. If the organization fails to withhold correctly, it is liable for the tax. Just know that what I read applies to tax-exempt organizations, but I believe it should also apply to others. If you found the video informative, please do me a favor and hit the like button and consider subscribing for more videos like this one. And do check out these other Timepiece Gentleman videos I think you'll really like. Thanks for watching and see you in the next video.